Most people are looking directly at the signals, yet they fail to see them. They watch numbers, react to noise, and chase opinions, all while missing the deeper message underneath. Silver and gold have always spoken quietly, never loudly, never emotionally. They don't beg for attention. They reflect behavior, confidence, fear, discipline, and long-term thinking. And right now, they are communicating something most people are completely unprepared to understand. The biggest shifts in life rarely announce themselves. They happen while the majority is distracted. While people argue over opinions, fundamentals keep moving. And while attention jumps from one thing to another, value stays patient. That is how it has always been. Those who learn to read signals instead of headlines gain an advantage that feels almost unfair, yet it is available to anyone willing to slow down and think. Silver and gold are not about excitement, they are about truth. They expose the difference between short-term thinking and long-term vision. When people are confident, they ignore them. When people are uncertain, they rediscover them. This pattern is not random. It reflects human psychology. It shows where trust is shifting and where stability is being quietly reevaluated. Successful investors did not build wealth by reacting. They built it by observing patterns that others dismissed as boring, understanding cycles, and understanding that when something ancient continues to matter in modern systems, it is not accidental. It is foundational. Gold and silver do not predict the future. They reveal the present more honestly than most indicators ever could. The real signal here is not about price. It is about mindset, about preparedness versus dependence. People who rely entirely on external systems tend to overlook tangible value, while people who value independence tend to notice it early. This applies to money, careers, and personal growth. Those who develop skills, assets, and discipline do not panic when conditions change. They adapt. Think about entrepreneurs who built during uncertainty. They did not wait for perfect clarity. They read the environment, positioned themselves quietly, and invested in resilience instead of hype. Silver and gold reward that same mentality. They favor those who think in decades, not weeks. Here is the practical shift most people need to make. Stop asking what is exciting and start asking what is essential. Stop chasing movement and start building stability. Diversify your efforts. Protect your downside. Invest in things that do not require permission to hold value. That might mean allocating responsibly, reducing unnecessary risk, or simply committing to consistent habits instead of emotional decisions. Every major transformation begins internally. When you train yourself to recognize signals instead of reacting to noise, your decision-making improves across every area of life. You become calmer, clearer, and you stop rushing. That alone puts you ahead of most people. Silver and gold are signaling patience, discipline, and long-term awareness. They are reminding those who are paying attention that real wealth is not built by speed, but by alignment. Alignment between mindset, action, and time. Most people spend their lives responding to noise instead of understanding signals. Noise is loud, emotional, and constant. It demands immediate attention and creates the illusion that something urgent is always happening. Signals, on the other hand, are subtle. They move slowly, quietly, and without drama, which is precisely why they are so often ignored. Noise thrives on emotion. It pulls people into cycles of excitement and fear, encouraging quick decisions without reflection. When individuals allow noise to guide their actions, they become reactive rather than strategic, chasing trends, opinions, and short-term validation. Signals do not operate that way. They require patience, observation, and the ability to step back from emotional pressure. This is where long-term advantage is created. Those who learn to identify signals train themselves to ask better questions. Instead of focusing on what is loud, they focus on what is consistent. Instead of reacting to surface movement, they look for underlying patterns. This approach applies across investing, business, and personal growth. Quiet shifts in behavior, changes in incentives, and long-term cycles reveal far more than sudden spikes of attention ever could. Many successful individuals developed this skill early. They noticed that when everyone was talking about the same thing, opportunity was often already shrinking. And when conversation moved elsewhere, conditions were quietly forming. This allowed them to position themselves calmly while others were distracted. Signals require discipline to follow. They do not offer instant gratification, and they rarely provide immediate proof, which makes them uncomfortable for people conditioned to constant feedback. Yet this discomfort is precisely what protects signals from being crowded. Only those willing to tolerate uncertainty benefit from them. Noise creates urgency. Signals create direction. Urgency pushes people to act quickly, often without preparation, while direction allows people to act intentionally with clarity and confidence. Over time, learning to ignore noise reshapes your mindset entirely. You become less reactive, less anxious, and more focused. You stop feeling the need to respond to everything and begin choosing where to place your attention and energy. That shift alone improves outcomes in every area of life. Most people never realize how much energy they lose chasing noise. They confuse movement with progress and attention with value. Those who step away from the noise begin to see the structure beneath it, the quiet forces shaping outcomes long before they become obvious. Silver and gold have never been about excitement or spectacle. They do not rise to entertain, and they do not move to satisfy impatience. They reflect something far deeper: how people think, how they feel about stability, and how they respond to uncertainty. When emotions shift collectively, these metals respond not as a cause, but as a mirror. That is why they reveal human behavior more clearly than almost anything else. When confidence is high, people tend to overlook tangible value. They favor speed, leverage, and promises of growth. And in those moments, silver and gold feel unnecessary, even outdated. But when confidence quietly erodes, attention slowly returns to what feels solid and enduring. This shift does not happen overnight. It begins internally, in mindset, long before it becomes visible externally. Human behavior is cyclical. Optimism expands, then contracts. Risk tolerance rises, then fades. Throughout these cycles, silver and gold remain constant in their role. They do not change to adapt to behavior. Behavior adapts to them. Successful investors learn to read this reflection early. They understood that when tangible value is ignored, it is often being undervalued psychologically, not fundamentally. They also understood that when attention suddenly rushes back, it is rarely at the beginning of a cycle. The reflection is clearest when emotions are quiet, not when reactions are loud. This principle extends beyond metals. In life, the things people neglect often reveal their priorities. Time spent, risks taken, and values protected all reflect internal belief systems. Silver and gold simply express this truth in material form. Understanding this reflection changes how decisions are made. Instead of asking what others are excited about, thoughtful individuals ask what others are ignoring. Instead of reacting to headlines, they observe behavioral shifts, which allows them to stay ahead of emotional waves rather than being carried by them. Silver and gold do not create fear or confidence. They register it. They quietly document the emotional state of decision makers over time. When you learn to see them this way, they stop being speculative and start becoming informative. Those who understand this reflection become less emotional themselves. They stop chasing movement and start interpreting meaning. They begin to trust patience over urgency, awareness over reaction, and long-term alignment over short-term approval. Long-term thinkers operate on a different frequency than those focused on short-term outcomes. While most people measure success in days or weeks, long-term thinkers measure progress in years and cycles. This shift in perspective changes everything. It alters how risk is viewed, how patience is applied, and how decisions are evaluated. Short-term thinking is driven by immediacy. It seeks reassurance, quick results, and constant feedback. Long-term thinking seeks alignment. It understands that meaningful outcomes require time to develop, and that early stages often feel unrewarding. Because of this, long-term thinkers are willing to endure periods of uncertainty without losing conviction. When attention is scattered, they observe patterns. When the crowd reacts emotionally, they remain analytical, not immune to uncertainty, but far less controlled by it. Many of the most successful investors and entrepreneurs built their advantage by focusing on fundamentals, while others chased surface-level trends. They invested in assets, skills, and systems that did not produce immediate validation. Over time, these quiet investments compounded, and when results finally became visible, they appeared sudden to outsiders, even though they were years in the making. Long-term thinkers also understand that opportunity often hides behind boredom. When something is exciting, it is usually crowded. When something feels uneventful, it is often underexplored. This awareness allows them to act when conditions are favorable, not when excitement peaks. In life, this perspective reduces stress. Decisions are no longer judged by short-term fluctuations. Setbacks are seen as part of the process rather than signs of failure, and progress is measured by consistency rather than intensity. Long-term thinkers are selective with their energy. They do not feel compelled to respond to every development. They choose where to focus and where to wait. This selectivity preserves clarity, prevents burnout, and allows for better judgment when action is truly required. Because they are not constantly reacting, long-term thinkers often move before others realize a shift is happening. They position themselves early, not out of prediction, but out of understanding. They recognize that time itself is a resource, and using it wisely is a form of leverage. Value rarely announces itself in dramatic ways. It develops quietly, often in places where attention has faded. And while most people chase what is popular or exciting, true value is usually forming in the background, unnoticed and underestimated. This is why it becomes obvious only in hindsight. By the time it is widely recognized, much of the advantage has already passed. People tend to equate visibility with importance. When something is not being talked about, it is assumed to be irrelevant. This assumption creates blind spots. Value does not require validation to exist. It grows through fundamentals, consistency, and real-world usefulness. When attention eventually returns, it feels sudden, but the foundation was laid long before. Many successful investors and builders understood this early. They learned that the absence of excitement often signals opportunity rather than danger. When no one is paying attention, Prices, expectations, and competition tend to be lower, creating room for thoughtful positioning. Acting during these quiet periods requires confidence and understanding, not confidence and consensus. This principle applies far beyond investing. Skills, habits, and relationships all follow the same pattern. The most impactful skills are often developed quietly over time without applause. The strongest habits are formed without recognition. The most reliable relationships are built steadily, not publicly. Value compounds in silence across every area of life. Recognizing value before it becomes obvious requires patience and curiosity. It means looking beneath surface-level trends and asking deeper questions. Why is this being ignored? What role does it play beneath the surface? And what happens if attention eventually returns? These questions guide better decisions than simply following what is popular. Most people wait for confirmation before acting. They want proof that something matters. By the time proof arrives, opportunity has often already diminished. Those who understand value act on logic rather than validation. They accept uncertainty as part of the process and trust their analysis over public opinion. When value finally becomes visible, the shift in perception is rapid. What was once overlooked suddenly feels essential, and people rush in, driven by urgency and fear of missing out. Those who recognized value early are not surprised by this reaction. They anticipated it. Learning to recognize value early changes how you approach decisions entirely. You stop chasing attention and start building substance. You become comfortable moving without applause, and over time, this creates a quiet confidence that does not depend on external approval. That confidence itself becomes an asset, guiding you toward opportunities others only notice when it is too late. Preparation is what separates stability from shock. When people are unprepared, they're forced to react. When they are prepared, they are able to choose. Most individuals wait until conditions change before adjusting their behavior. By then, options are limited and pressure is high. Preparation shifts action earlier, when clarity is still available and decisions can be made calmly. Reaction is driven by emotion. It happens under urgency and often leads to regret. Preparation is driven by intention. It happens quietly, long before necessity appears. This difference determines outcomes in investing, business, and personal life. Many successful people adopted a mindset of readiness rather than prediction. They did not try to time every change. Instead, they positioned themselves so that no single outcome could derail them. They diversified their efforts, protected their downside, and focused on resilience. When uncertainty arrived, they were not scrambling, they were adjusting. Preparation reduces dependence. When resources are allocated thoughtfully, individuals rely less on external rescue. And knowing that you have margin changes, how you respond to challenges, you think more clearly, communicate more effectively, and avoid impulsive decisions. In practical terms, preparation looks unexciting. It may involve consistent saving, learning, skill development, or reducing unnecessary exposure. These actions rarely produce immediate rewards and often feel slow compared to reactive moves. Yet over time, they create a stability that reactive behavior never can. This mindset extends beyond finances. Prepared individuals invest in their health before illness forces change. They build relationships before they are needed. They develop emotional control before stress tests it. Preparation is proactive care for future versions of yourself. When conditions shift, those who prepared move with confidence. They are not driven by fear because they are not cornered. They have options. They can wait, adapt, or act selectively. This flexibility is the real reward of preparation. Most people underestimate how powerful readiness is because its benefits are invisible until tested. They see reaction as action and preparation as inaction. In reality, preparation is the highest form of action because it shapes outcomes before pressure distorts judgment. Over time, preparation compounds into stability. Stability allows clearer thinking. Clearer thinking leads to better decisions. Better decisions reinforce preparation. This cycle creates a foundation that can withstand uncertainty without panic, allowing progress to continue even when conditions are changing around you. Real wealth is rarely built by moving fast. Speed creates the feeling of progress, but it often bypasses the depth required for durability. Patience allows decisions to mature, strategies to prove themselves, and outcomes to compound naturally. Those who prioritize speed focus on short-term wins, while those who value patience focus on structures that can survive time. Speed is attractive because it promises immediate results. It feeds the desire for certainty and validation, but speed often amplifies mistakes. Acting quickly leaves little room for reflection, adjustment, or understanding. When decisions are rushed, they are usually guided by emotion rather than logic. Patience slows the process just enough to allow clarity to emerge. In wealth building, patience works hand in hand with consistency. Small repeated actions applied over time create exponential results. Compounding only rewards those who allow it to operate uninterrupted. People who constantly change direction in search of faster outcomes reset their progress again and again. They stay busy, but rarely move far. Patience also changes how risk is managed. Those who rush often overexpose themselves, chasing returns without considering the downside. Patient individuals build positions gradually. They observe, adjust, and allocate with intention. This approach reduces fragility and increases resilience. When conditions shift, patient builders are far less likely to be forced into reactive decisions. Many successful investors and entrepreneurs describe long periods where nothing exciting seemed to happen. During those periods, foundations were being laid, systems were refined, and skills were sharpened. While outsiders saw inactivity, progress was quietly compounding, and when results eventually appeared, they looked sudden, even though they were the product of sustained patience. In personal development, patience is equally powerful. Skills take time to develop. Confidence grows through repetition and experience. Those who rush mastery often remain stuck at a surface level, while those who allow time to teach them develop a depth that cannot be replicated quickly. Patience also protects emotional energy. Constant urgency creates stress and burnout. When everything feels immediate, judgment suffers. Patience restores balance. It allows you to step back, assess situations accurately, and respond rather than react. Real wealth is built by aligning with time instead of fighting it. Time rewards preparation, discipline, and consistency. Those who respect this relationship stop chasing shortcuts and focus on building things that last, understanding that slow progress sustained over time is far more powerful than fast progress that cannot be maintained. Those who read signals early develop a kind of confidence that does not need noise to survive. It is not loud, not reactive, and not dependent on constant confirmation. While most people wait for certainty, early signal readers accept uncertainty as part of the process. They understand that clarity rarely arrives all at once. It forms gradually through observation, pattern recognition, and a willingness to think independently. Early signal reading is less about prediction and more about awareness. It is the ability to notice subtle changes before they become obvious. Shifts in behavior, changes in incentives, quiet imbalances, repeated patterns that others dismiss as irrelevant. Most people are focused on outcomes. Signal readers focus on direction. That difference allows them to prepare while others are still debating. Because they act earlier, their decisions are calmer. There's no rush, no pressure to chase, no fear of being late. When movement begins, they are not scrambling for position. They are already positioned. This creates a confidence that feels grounded rather than emotional. Confidence built this way does not spike and crash. It stays steady. Many successful investors and builders describe this experience the same way. When others panic, they feel composed. When others feel urgency, they feel patience. This is not because they know the future, but because they respected the process early. They did the thinking before emotions took over the environment. Reading signals early also reduces dependence on external validation. When your decisions are based on understanding rather than popularity, opposing opinions do not feel threatening. You can listen without being shaken. You can adjust without abandoning conviction. This balance between openness and stability is rare, and it becomes a powerful advantage over time. In careers, those who read signals early adapt smoothly. They see where skills are becoming less relevant and where new value is forming, and they start learning before pressure forces them to change. As a result, transitions feel natural rather than disruptive. In personal growth, early awareness allows small corrections before problems compound. Confidence later is the result of work done earlier, built through preparation, not reaction. When others seek reassurance, early movers are reviewing options. When others hesitate, they act deliberately. There is no rush because there is no surprise. This kind of confidence changes how life feels. Decisions carry less stress. Setbacks feel manageable. Progress feels intentional. Instead of reacting to circumstances, you feel aligned with them, moving through uncertainty with steadiness because you recognized its shape long before it arrived. Those who wait for certainty often move fast but feel unsure. Those who read signals early move slower but with clarity. Over time, that clarity compounds into a momentum that looks effortless from the outside. Even though it was built quietly, patiently, and well before most people realized anything had changed,